The rand, we know, is a volatile currency, but it's been particularly volatile. A week ago, 8.14, it's up to 8.54 this morning.
Yes, indeed, David, it has been particularly volatile and has shown considerable weakness over the past couple of days. We haven't really seen any local data that's coming out that could possibly provide some lift to that currency. But having said that, even if we did have local data, whether it's likely to be positive is another question. The data that we have seen over the past couple of weeks has been negative. It hasn't really provided the boost that we're looking for. The rand is particularly wedded to what's happening in the global economic environment, and with continued uncertainty about what's happening with regards to the Eurozone crisis, we're not likely to see much of a lift coming through anytime soon. So we're really looking to see the rand trade in much of the same range that we saw yesterday, with a range of about 8.37, possibly to about 8.62.
And then there's the range that the euro-dollar ratio has been trading in, 123 to 126 for a long time. It's been hovering around 121, 120. Your view on that?
Yes, it is threatening to go lower than 120. We have been saying over the past couple of weeks that the euro could possibly move towards 115 by the end of the year. And if you look at what's happening in the Eurozone, we're not seeing really anything coming out of the Eurozone that could indicate that we could see a stronger euro. If you look at just what's happened yesterday, we saw Spanish 10-year bond yields increase to above 7 rand after just having been just above 6% last week. So we are seeing a significant weakness come through from there. There's also concerns that Greece is not going to reach or rather meet its debt target. So we are possibly going to see the Eurozone continue in this weakness, the state of weakness that we have seen over the past couple of weeks into the remainder of this year. So our view, we are remaining wedded to the idea that the euro could possibly end the year at 115.
Well, we're never short of indicators, and you've got some information coming out of Germany, business sentiment, UK GDP numbers, US house sales. What are we looking at there?
Well, we're not really expecting any of that data to show really robust growth. With regards to the German business sentiment, we are seeing a downward trend. We have seen it for the past 4 or 5 months or so. So it's not really going to provide positive sentiment, and it's really going to spur that risk-off sentiment that we have seen. With regards to the UK GDP data, we could possibly see a third quarter of negative growth coming through for the second quarter. And if that materializes, or if we see lower than expected GDP numbers come out of the UK economy, that could also spur that risk-off sentiment. New home sales data out of the US economy is expected to come in slightly higher than what we saw the previous month, but on a month-on-month basis, just looking at that number, it's still quite low, and we need to see more of a robust improvement in that if we are going to say that the US housing market is starting to show a turnaround. So there's no real boost coming out of the Eurozone or the US economy today.
Well, no surprise there, given what's been going on. PPI numbers in South Africa to finish off?
Yes, we are seeing the PPI number for June coming out tomorrow. We are expecting 6.4% for June from 6.6%, and it's a little bit out of consensus at 5.9%, but we are seeing some upward pressure coming through from electricity prices, which is a seasonal component. Normally we see higher electricity prices in June, July and August, so that could provide some upside pressure, but we are expecting to see a moderation in food prices at the manufactured level, as well as prices of products of petroleum and coal, as well as basic metals, which could spur a downward drift.